We have with us Mr. S. A. Narayan, President Commercial Banking for Kotak Mahindra Bank. Mr. Narayan, thank you for joining us on Bloomberg Coin. To begin with, can you just take us through the valuation? You paid 1.9 times books, right?
That's we paid about 1.9 times book, and we believe that's a very fair valuation. The asset is about 500 crores on a capital of about 73 crores or something. I think it's a very fair valuation. So for both sides, and the good part about it is that it's a growing organization. They have grown their assets last time 30%, and first quarter also they have grown vis-a-vis last year. So what we found it exciting and opportunity there is a platform which has the ability to grow but needs some capital, and if we give the necessary capital, we think the organization can grow at a size, at a pace faster than what they've been growing up to now.
Of late, we have seen a lot of private sector banks going after MFIs because of the kind of asset growth which is happening there. Is that one of the reasons? Because you are maybe a third private sector bank to go and acquire an MFI.
Okay, first, there are a lot of rationales in it. One rationale is that it's a growing space. More important, we believe that it is an opportunity to serve the bottom of the pyramid, that is the weaker section, which banks find it difficult to serve. Two, that gives us an opportunity also to offer other financial inclusion products to that segment of the market. And the beauty of this is it's a commercially viable business, at the same time meeting the social obligations of the society. Very few opportunities to get like this, where you can both meet the social obligation and the commercial obligation. So that's why we said it's a growth opportunity.
So social cause, and that has been there for a couple of years now. But MFIs have been there. We have one MFI listed as well in our exchanges. Why now that private sector banks are looking at MFI or that particular segment very closely?
Okay, if you go to history back, MFI most of them started with a social obligation. Then we had some issues post the Andhra Pradesh issue, not well regulated. Now, with RBI regulation in place and well-defined terms of lending rate, margins, etc., it has become a well-regulated industry, and that is what we always like. So, hence and plus, more important, the opportunity now it was always there, and the opportunity we believe is much. There's a large opportunity there, and this sector will keep growing because the customer base which you're trying to serve is a large customer base, and hence we think that's a good opportunity.
It has a net worth of around 78-80 crores and a book of around 400-500 crores, right? And this fully leveraged 4-5 times it's already leveraged. What kind of capital needs it has over the next 3 to 5 years? You said that you will be providing capital as and when required, but to grow at 30% every year or more than that, what is the kind of capital requirement for that?
See, if they are to take an example, if 500 has become 1,000, they may need about 100 crores capital, because of course they will borrow otherwise. So it's a very small amount of capital which is required from our point of view. Of course, when you look at the current promoter's point of view, maybe it was a constraint. So I think it is a great fit.
And while you are acquiring this MFI to get into this segment, you have certainly an exposure to this segment through securitization and other lending which you do. How big is that book, and by the next 3 to 5 years, how bigger the book will be?
We have today in the form of term loans or securitization, etc., which will be more than about 1,500 crores of exposure to that segment. And that book will keep growing based on a normal lending opportunity transaction. That is different from this. This is something which this organization, that is BSS, will start growing on its own, whereas that will be done by the normal bank advances group. I mean, they find the opportunity either in the form of securitization or advances or whatever it is.
What about the geography where it is present now? It's currently in Karnataka and to some extent in Maharashtra. Are these markets mature enough, and are they giving you enough returns? Will you be looking at some other northern states as well, like Bihar, UP, Madhya Pradesh?
Yes, today they have a substantial exposure in Karnataka with some exposure in Maharashtra and getting into Madhya Pradesh. We plan to get into other states, both northern and other southern states, which we will evolve and grow over a period of time. So we believe that even today the margins, whatever we have seen in the book in Karnataka, is pretty good. and most important, we believe the quality of the portfolio was very good, and the NPA is almost zero. Okay, so that's a very interesting thing, and due more than 0 days due is almost zero. So it was a from that point of time, it was very good.
And what about the spread it's working on? What kind of spread does it work on? You said it has a 14 crore PAT for last financial year.
Correct.
So what is the kind of spread it's looking at?
See, the gross margin is now, regulated by RBI. So they are within the gross margin, and they are almost at the top end of the gross margin.
Okay. And is there a way to expand, and how much will it, by when do we see an impact on the balance sheet or profitability of Kotak from this segment? Maybe in medium to long term, not in short term maybe.
Yeah, obviously, short term it cannot happen because the size of both the Kotak balance sheet will also grow. So, but we believe that pace at which this will grow will be faster than the balance sheet growth of Kotak. And so, if you ask me when, maybe 2-3 years, it will have some. You will see some reasonable contribution from this to the Kotak balance sheet through Kotak Finance.
Mr. Narayan, thank you very much for joining us on Bloomberg 20.
Thank you.